of course, according to the government and the Fed. But, if we look around, we look at housing, we look at the stock market, we look at college tuition, we do see inflation that's just kind of hidden. Now, I wanted to talk about why wages have been declining, or why are they, pretty much gone nowhere over the last, 8 years or so. What's your take? And I know you wrote an article about this. Why have real wages not gone anywhere?
Dave, that's an excellent question. And it's something that has puzzled economists, conventional economists, because normally when you have low unemployment, like we have so-called full employment, right? Like an unemployment rate of less than 5 is considered full employment, because about 5% of the population is kind of always moving between jobs or career changes, and it's kind of a normal churn. So normally when you have full employment, then employers have to bid with higher wages and better benefits to get the most productive workers to quit some other employer and come to work for them. And so that generally pushes wages higher. And that's what we saw in the 90s, with the dot-com boom. There was a generalized wage increase, even for people that had nothing to do with the dot-com or technology boom. It's like the rising tide raised all ships, right? And so that's the ideal in a consumer economy, right? Because if you need to have the wage earners and salary earners getting more net income every year so that they can buy more stuff, right? And they can borrow more money and have a little extra money to service a new car loan or, a student loan or some other debt, right? And so if wages are stagnating, it means that people have less money to spend on stuff and they have less borrowing capacity, right? Because they're already, their income's already allotted. And so they can't borrow more money unless the loans are at like 0%, which is why we see auto loans at, 1% or, basically zero, because otherwise people can't afford to buy the car. So the mystery is why. And so the conventional kind of view is that they look at globalization, which we all know is a key factor, because basically every American worker that's doing any kind of job that's tradable, which means it could be done anywhere on the planet, they're in competition with every other worker on the planet, right? So, of course, since there's about another billion or two workers that have been added to the global economy with the rise of China and other nations, then of course wages are going to go down, because this is part of what drives jobs overseas. Is employers can say, well, I can pay somebody $2.50 an hour elsewhere, or I can pay somebody $20 an hour in the States. Well, I'll be fired if I don't increase profits, so I have to ship these jobs overseas. So that's certainly one thing. But I think we're underestimating the impact of financialization, which is like it's a term for making money with leverage and credit, basically, and kind of gaming the financial system to make a lot of money. And so when you can do that, then you don't need to hire people, because you're basically making money by buying back your stock and jacking the price up, and then you cash out your millions. And like companies that do this kind of gaming, they make a lot of profit, right? Wall Street loves them, the government loves them, but they're not generating any new goods and services, right? They're not creating new products, they're not building factories, they're not hiring more people. They're just fooling around with money. And so that's where the U.S. economy has gone since the 90s, in my view. So that's a big influence on wages, because I think hiring has been stagnant if you look at full-time private sector jobs, right? Not government jobs, not part-time jobs, not, Uber drivers. Full-time regular jobs have barely risen from where they were in 2007, a decade ago. So that's stagnated, and I think that shows the demand for workers is really not that strong in the U.S., despite all the positive numbers.
And I hear what you're saying. And what's funny is that the corporate media is out there and they're continually telling us that, they have so many job openings. They just can't find the people to work. And I know when I work in a corporation, we had these open recs. And, when we had a hiring freeze, we still had the open recs. We were still interviewing people, but we were told that we couldn't hire anyone. So it gave the illusion that we had all these job openings, but we were in a hiring freeze and we had to continually interview people, but we never really ended up hiring anyone. When, from your research, when you look at what's been going on and they tell us that they have all these job openings, what do you see?
And I hear from other people similar stories, is that there are certain jobs which are hard to fill, like high-tech jobs that in which people are expected to know the latest programs and have already have 5 years experience and that kind of thing. There is a demand for really high level skills that are scarce, and they're scarce because it takes a lot of effort and years of work to build up those skills. But another factor is the cost of benefits is rising. In other words, what to employers, what we call labor overhead. In other words, when you hire somebody and you give them a salary of $50,000 a year, that's only part of the compensation package. The other part is what the employer pays in health care, 401k matching, retirement contributions, workers' compensation insurance, disability insurance, and all these other costs. Well, healthcare has been skyrocketing for the employers, and not every employee sees that. A lot of them do, right? Because your copay goes up and that kind of thing. But it's entirely possible that the employer is looking at another $5,000 a year, to pay in healthcare insurance, and that money might have gone to a raise, or it might have gone to a new employee. But instead, it's like, well, I don't have any money to hire somebody else. I'm better off paying my existing workforce overtime or try to squeeze a little more productivity out of them. And so this is another influence people don't recognize, except if they're an employer themselves, that this stupendous, endless rise in healthcare costs is basically crushing employers, that they have to spend more money on that. So there's less money to give in wage increases and less money to hire other people. And it's real. If you talk to people that hire people, then it's a very real impact on their business. And so, it goes up every year, 5, 6, 10%. Sometimes we see these leaps of 20%, 30% in healthcare premiums. And so those of us who are self-employed, we see it ourselves, right? Because there's no buffer. We pay what the market claims is the real price of healthcare, right? There's nobody to subsidize us. And so you of course are aware of what the real cost is, and we see this going up by thousands a year, So anyways, my point being is that healthcare is one key issue in why employers are hesitant to hire new people or why they have difficulty giving raises. The other thing is a mismatch in our educational system. And in other words, even if a person goes to college and gets a degree in the sciences or biology or computer science, in a lot of cases, it turns out that the skills and the knowledge base they were taught in school is not what the employers need. They actually weren't taught the skills the employers need to actually function in the world we live in today. And I call this world, the emerging economy, and other people call it like the fourth industrial revolution. It's the digitization of our entire economy. It's like working with automation. It's working with software. And so all these skills our employers are finding that the college system is not equipping our students for the economy as it is, which is very dynamic, fast-moving, and you really have to learn how to learn. That's the skill that everybody should be taught. But instead, we're into this over-credentialing. Like our system is set up like, oh, well, you can't get a job? Well, then go borrow another $100,000 and get another credential, get another degree, get a master's degree. You still can't get a job? Oh, well, then get a PhD. And so we were in this sort of debt serfdom, where the solution is always to go out and borrow another $100,000 and get another degree. That's not the solution. but our system is blind to that mismatch.
Yeah, I do see that, and this is why a lot of the individuals who are graduating college, that's why they can't find jobs. They are looking for jobs, and a lot of them are still living with their parents. A lot of them have part-time jobs, and that brings us into the student loan crisis, where these individuals, they can't pay back their student loans because they're not getting the high-paying jobs that they were kind of promised. If they went, if you go to college, you're supposed to learn, get an education, get a degree, and get a good job. You pay back your loan. You buy a house, you buy a car, you start, with your family, and this is not happening anymore at all.
When you have a really a society and an economy that's in a transformation, typical of an industrial revolution, right? And even though that term, we think of, steel mills and building railways and all that stuff, those were the the first industrial revolutions. And then the third one is typically considered like telephony, the telephone system, and air travel, TV, radio, all of the media. What happens is security, of course, diminishes because employers are under a lot of stress as things change. Then a lot of businesses can't keep up. They go broke. They make a poor decision and miss the market. And so there's a lot of a tremendous rise in insecurity. In other words, the good old days, which a lot of people look back on nostalgically, is when like the 50s or 1960s, when the U.S. was the dominant player in the global economy. There wasn't much global competition. And people could go to work for an employer like Kodak or something and work there for 30, 35 years, regular paycheck, good benefits. They don't have to worry about anything, right? And so that kind of job is just gone. And it's gone not because people are evil or something bad happened, like everybody got some political movement or something arose. It's really much more fundamental than that. The global economy is just extremely dynamic, and the technology is impacting every field. And so the insecurity is rising across like basically every sector. Maybe a little less in the government sector. But as government pension funds get under pressure and so on, then we might start seeing more insecurity even in the government sector.
Yeah, you mentioned the global economy, and here in the United States, we see the economy from the stats from the government, from the Fed. I mean, they're trying to tell us that everything is fine. They're trying to show that, the stock market's moving up. The GDP numbers are fantastic. But when we look at certain things, and you wrote an article on housing, and I've been following housing quite a bit, we notice that things are changing in the housing market, and a lot of the cities that we follow and look at and research and do research on, we notice that they are hitting bubble territory, where a lot of these cities, the bubbles are a lot larger than they were back in 2007, 2008. And we can see the housing market. If I look around the area that I'm in and other areas, I see housing prices, well, they're moving down. They're not actually moving up. And I'm looking and I'm seeing houses still on the market for, 1, 2, 3, 4 months now. And we're coming out of the summer months, and the stats for housing for the summer months, they have declined dramatically. Now, from your research, are we in a housing bubble right now?
I would say absolutely yes, although it's quite uneven. As we anybody that follows housing knows. In other words, like I had a reader who lives in Central Ohio, and he told me he just bought a house, and it's older house, small, not anything fancy, needs a little work, for like less than $50,000, right? And so you have these huge swaths of the Midwest and rural America where housing is still dirt cheap, right? Because people have left there, or there's it's hard to get a job there, so wages are low, and so housing is also low, and those areas are not on the overseas money radar, shall we say. And then there's cities like Boston, where there was just an article in the Boston Globe, the newspaper, that said even in the suburbs, it's like $1,000,000 buys you like a, little old bungalow or a nothing special house in the greater Boston area. We know that's true of course, greater New York City. We know that's true increasingly in like Seattle, which is now seeing a huge bubble in their housing prices because one reason is apparently overseas Chinese money is flowing from Vancouver, which is they've already created a massive bubble, and now it's flowing down to Seattle. And so, Seattle's last bubble was in the $400,000 range, and now it's $800,000. I mean, so the question is, how can a normal person or a couple earning a decent wage, how can you afford a house for $1 million? I mean, theoretically, you need to come up with like $200,000 in cash for your down payment, and then you need to borrow $800,000. I mean, these numbers don't add up to anything except an income for like a doctor or a lawyer or a top executive or an entrepreneur who's hit a gold mine. I mean, it's out of reach, and so we have to ask, why are these especially coastal cities in the U.S. Why is the price so out of reach? And of course, we all know the answer is global capital is flowing into the U.S. looking for a safe haven or a place to sort of stash all this cash that they have. And so we see it also in like London, Paris, certain other global cities that the global pool of capital is they like Switzerland and Paris and London and New York and so. To some degree, they're discovering Seattle and Portland, and of course, Miami's always been a hotspot for foreign capital, often from the Southern Hemisphere, right? So, what I see globally, and we see it in the U.S., is there's more and more global capital that's a little fearful. Like, the rich guys understand that the global economy is much more fragile than it seems. And so they're looking for some place to bury their capital. And so real estate is handy. And so that's why we have all these cities with like empty apartments, like Sydney in Australia. I mean, they're building all these fancy high rises, and then the buildings are mostly empty because it's just an investment. It's not an actual, I'm going to live here. It's shelter. And so then that's creating a lot of political instability in these places because the 90% of the people are priced out of shelter. And so, cities and states are sort of struggling with this. But in the meantime, they're also banking huge increases in property taxes and transfer taxes. And so, the governments are loving these bubbles because they're generating huge increases, in tax revenues. But at what cost? And so we see this weird dichotomy here in the U.S. where there's huge swaths of the nation where housing is remarkably affordable, but it's difficult to get a secure job there. And then we have these bubble coastal cities where there's quite a few jobs, but they don't pay enough to go buy an $800,000 apartment or $1 million house. And so it's another kind of push in the trend we live in, which is the haves and the have-nots. The divide is growing between them, widening in income, widening in wealth, widening in housing, widening in every measure.
Would you say, from what I hear you saying, would you say that most of the American people are sitting on the sidelines right now while investors are purchasing these homes?
Yeah, I think many Americans, of course, there's always like people who are borrowing a lot of money and speculating, house flipping, right? Like getting into a hot market and paying whatever the market price is, and then fixing the place up and hoping to make a killing. That kind of speculation is popular on TV, but of course the real speculation is done at the much higher level. That's where the Blackstone and the hedge funds and the wealth funds are buying apartment complexes or building, 300 unit complexes, rental complexes. And so, the Federal Reserve just came out with this massive, fairly extensive report, which is in a PDF, and you can find it around the web. And it's about income and wealth. And, it's kind of a statistical, propaganda in that the first couple pages, it's all about, oh gosh, the bottom 50% of America's wage earners, their income increased by 6% or 10% or, some kind of number that looks positive. But then you dig down and you're going, okay, so people that made $49,000 now make $51,000 according to the Fed. Yay, right? That's better than losing 2,000. But then you look at the wealth of the top like 5% or 1%, and it's like, oh, well, their average wealth was 900,000 and now it's 1.3 million. And it's all like, so they just booked 400,000 in gains and everybody else got $2,000 more a year and we're cheering. I mean, and so buried in there was this statistic which I found interesting. It was just a throwaway, but it said the number of American households that own an investment real estate property, like a rental home, as their investment nest egg actually fell. It used to be 7%, or now it's 6%. So this was an indication to me that the average household, even the upper middle class, that has money set aside for retirement, or that they have enough money they could consider buying a duplex or something so that they could have a rental income as their nest egg. The number of people who are qualified to do that is actually declining. And that's because, the Blackstones and the hedge funds and the wealth funds, all of these guys are snapping up all the real estate in the U.S. that's and using it as rental property. And that's partly why we see home ownership actually stagnating as well. And so that I thought was interesting. So that's why housing is so hot in certain areas. Is there's global capital is seeking like a positive return, and so they're snapping up the desirable real estate, but meanwhile the undesirable real estate in much of the U.S. is just languishing, and so but it's shelter. And so then you have to start wondering, when are people going to start moving out of Seattle and Boston and Chicago and start moving to lower cost areas and accepting lower pay so that they can actually own a house? And that seems like a wise move to me. Why stay in an urban area and be a renter your whole life, where you could, even if you took a pay cut of 50%, but you could own a house or a farm or, acreage. And I wonder if that's going to be a trend going forward.
Now, since they've been pumping the economy up since 2009, has anything actually changed in the economy? I mean, we know Trump is president now. He said he was bringing back manufacturing, making all these promises. But since 2009 up to this point, is everything exactly the same, or do you see a difference?
I think there's a divide in the population. Not political, not between Democrats and Republicans or any of that kind of stuff. It's a divide between people who think that this recovery is real and that the economy is now on a solid footing. And, because the statistics say unemployment's low and household income is up and GDP is up and everything's great. Then there's the people on the other side of the line go, no, this is all BS. This is basically a fake recovery, and beneath the surface statistics, the economy is increasingly fragile. There's a lot more debt piled on everything: corporations, households, the government. This whole thing is just a fraud that's been basically created by borrowing and spending trillions of dollars, right, at the federal level, the state level, the household, corporate. Everybody's borrowed tons of money and spent it or invested it in speculation, but we haven't really invested much of it in increasing productivity, which is the source of wealth, or in changing our economy to become more efficient and more productive for everybody in the economy. Instead, all we've done is we've created these trillions of credit, and all the wealth and income that's been created has flowed to the very top. It hasn't been evenly distributed. So in my mind, that's a fail. That's a complete fail. You've generated and borrowed trillions of dollars at every level, and yet all the benefits have flowed literally to the top 1/10 of 1%. There was a chart in the New York Times, which I posted on my site, and it showed that all the income gains over the so-called recovery have flowed not to just the top 1%, but to a fraction of the 1%. And there was a few, scraps, left for the top 10% and basically nothing for the bottom 90%. And so that to me is a massive fail. And but it's not yet apparent in the statistics. But I think the economy is extremely fragile beneath this surface veneer.
I wanted to switch over to what China has done, where they created this yuan-priced crude oil benchmark backed by gold. And Venezuela is out there saying, well, we're not going to use the euro, we're not going to use the dollar, we're going to use the yuan. Russia is going to be using it. We see Iran might be using it. Most likely other countries are going to join in and use this yuan price crude oil benchmark, which is going to be backed by gold. And, a lot of people are out there saying, okay, this is another wedge in the demise of the dollar, where it's being, basically removed from the system. Not totally, but we can see things moving very, very slowly over to something completely different. And you have a little bit of a different take on the demise of the dollar. When you see what's happening right now, where, China, Russia, everyone has been moving away from the dollar, what do you see happening with the dollar? Will this continue to be the reserve currency of the world?
Well, Dave, it's a good question, and it's a complicated question, and I don't claim to be, like the expert of all experts, but I am an interested amateur in looking at the currency markets, and I think we can get a little more insight if we distinguish between using a currency for transactions, and then distinguish that use of a currency from using the currency as a reserve, meaning that you're holding it, right? You're setting it aside, and that's your nest egg that will help, that you can draw upon if you have like a financial imbalance or crisis. And so when people talk about, well, the dollar is going to be not be used for oil anymore, all that's interesting, but that's a transaction. So say if I have, say, pesos or Japanese yen, and I need to buy oil, well, it doesn't really matter to me if I buy it based in dollars or if I buy it in yuan or rubles, because I'm only going to be buying those dollars, rubles, or yuan for like 3 seconds. Like, in other words, I'm going into the foreign exchange market, I'm transferring my currency into whatever currency I need to buy the oil. I'm buying the oil, bang, done. So that's why the currency markets, the volume is around $3 to $4 trillion in currency trades every day. So that's the entire balance sheet of the Federal Reserve, traded every day in all sorts of currencies, right? So that's a really big market. And so I don't really think it's going to have an influence if, say, 500 billion or some huge number of transactions are made in yuan or rubles or yen or yuan. I don't think it's really going to have an impact. What really has an impact is what currencies are going to be available as reserves, and what are people going to hold as reserves. And so, as we all know, virtually every central bank of a major trading country holds gold as part of their reserve, right? And they don't really talk about it much because I think they fear the public awareness that, gee, well, what's the basis of our money? It's not really backed by gold, right? It's just the trust that we have in our currency, that it's going to have value tomorrow. And so why are central banks holding gold? if the money's so solid and it's not backed by gold, then why are you guys owning all this gold? And it's that's a conundrum that the central banks just don't address, right? And so a lot of people look at what China's doing by acquiring gold and a gold-backed trading currency. They see this as a positive because we haven't had a gold-backed currency on the global stage for like 40 some years, right? And it used to be the gold standard mint that the British pound and the US dollar were backed by gold, and you could actually convert your paper pound into an equivalent sum of gold. And so that convertibility has been lost for decades. And so it gets a little confusing, though, because people talk about a gold-backed yuan or something. Nothing is gold-backed unless you can convert the currency into gold. If you can't convert it, then it's meaningless. You know, in other words, we could create a currency out of thin air and say, oh, it's backed by gold. Well, if you can't convert that into gold, then you're just taking somebody's word for it. And of course, you can also revalue stuff. Like, in other words, a gold-backed currency, you could say, well, it's 1 unit of currency for every ounce of gold. So every unit of currency is worth $1,300. Well, then you can revalue it and say, well, we decided to revalue it, so now it's only worth 1/10 of an ounce. So, I'm kind of trying to describe how you can play a lot of games with the idea that a currency is really backed by gold. Because if you can revalue it, then overnight, then it's not really as safe as everybody would think. And so the other point I want to make that's often lost is the thing with gold-backed currencies that's difficult to understand is when you run a trade deficit, like you're buying more from the rest of the world than you're buying, then eventually your gold goes over to pay the bills, to pay the people you've been buying stuff from. So if you run a deficit, you're going to lose all your gold. It's going to be transferred overseas to pay your trade deficits. And if you run a trade surplus, like China does, well, then you just end up with a whole bunch of other people's currency, right? That's why China has so many dollars, is they've been running this huge trade imbalance with the U.S., trade surplus, and so they end up with hundreds of billions of extra dollars. And what the heck do you do with that stuff? So what you do is you buy treasuries, or you buy apartment buildings in Seattle, or you try to buy American factories. I mean, you're trying to do something with all this extra money. And so if you want to understand like the currency flows of the world, you have to look at who's running trade surpluses and who's running trade deficits. And so in this bizarre kind of way, the U.S. is the reserve currency because it exports its money. It runs a trade deficit with the rest of the world, and so it's exporting money and it's importing all this stuff, electronics and oil and a variety of goods. And so you really have a hard time beating that system. Like, we create money out of thin air, we give it to you, and then we get actual stuff. Hey, this is a pretty good deal, right? I mean, it's a great deal. You create money out of thin air, and then you get actual stuff. And so, but the net result of that is the U.S. has pushed enough money out into the global economy that it can act as a reserve. Because you actually have to have enough out there. I mean, you have to have trillions of units of your currency in order to act as a reserve currency. And so there's all these dynamics that complicate the idea that the dollar can be replaced. Because the only way to replace the dollar is with a currency that has the same size. In other words, there's like 10 trillion, 20 trillion units of that currency available for people to use and buy and store as reserve currencies. And so if you don't have enough currency, you can't act as a global reserve currency. It's kind of strange, but that's one of the dynamics. So I personally think the more currencies, the better. I would like to see Bitcoin be the global reserve currency. I'd like to see a gold-backed currency out there that people could buy if they wanted to. I'd like to see a wide range of currencies that were priced by the market. In other words, supply and demand. And if the dollar declines as a result of that, hey, it's all to the good in my mind. But I think that's a very slow process due to the issues I've described.
Now, you mentioned Bitcoin, which is the crypto market, the blockchain technology, and we have different messages coming out of different bankers. Like Jamie Dimon is saying that Bitcoin is like a scam. Then we have Christine Lagarde is out there saying that, if Bitcoin does become a currency, we won't need the fractional banking system. So we have different people saying different things, and then we have governments kind of attacking the crypto market. Why do you think this is all happening all at once?
Those of us who are skeptical of conspiracies, we do find it somewhat strange, though, that literally the same week that Jamie Dimon comes out and says Bitcoin's a fraud and he would fire anybody that bought it, and never mind that the European division of his own bank, JP Morgan, apparently was buying crypto currencies, that same week. And then China shut down all these cryptocurrencies exchanges. It does seem like there's a bit of a concerted effort to suppress or control the cryptocurrencies. And obviously the motivation is highlighted by what Christine Lagarde said, which is it's a threat to the banking system and to the basically money machine that guys like Jamie Dimon have had, which is they take $1 in cash deposit and they can loan out $19 at interest and collect all that money. And that's the fractional reserve system. So that's been just like a wonderful money machine for the banking system. And so if that's threatened, then their power goes away. Their political power that they buy with campaign contributions and their power over the global economy. So of course Jamie Dimon has got to be terrified. And the fact that the head of the IMF, Christine Lagarde, spoke positively about cryptocurrencies is quite a revelation, because she must be positioning herself to prepare for the future, right? The IMF has to set aside protecting guys like Jamie Dimon, which of course is part of their job, but she's looking to the future and doesn't want to be left out of the future. And that's one of the issues with countries that are piling on cryptocurrencies and trying to ban them. I think there's going to be a big divide in the global economy. Those nations that embrace the blockchain technologies are going to prosper, and nations that try to suppress it, outlaw it, ban it, make it difficult to use, they're going to suffer the financial and economic consequences of clinging to a rotten, corrupt system from the past. And so there's going to be sort of a Darwinian fallout, I think. And it's interesting that, here in the U.S., the government has very carefully legally defined Bitcoin as a commodity. So in other words, it's like silver or a contract on oil or a share of a copper ETF. I mean, it's like a commodity, and so it's legal to buy and sell and own, and you just have to pay your taxes on the gains. And that's kind of like where I see it happening, is countries are going to be forced to embrace blockchain and crypto, and it'll just become another financial instrument like all the other stuff we do. And as long as you pay your taxes on any gains you register, then the governments will be happy with that. That's how I see it going. You either cling to the past or you embrace the future. And the future is always uncertain. So, there's risks to every change. But you either embrace it or you die. It's very Darwinian, and the global economy is very Darwinian in that way.
I mean, do you think the central bankers, because we know that UBS and many other banks, they're creating their own cryptocurrency that they're going to be using within the banking system? And right now, Bitcoin is very volatile. It's up and down. And not just Bitcoin, but the other cryptocurrencies are very volatile, where they have these huge swings. Do you think the central bank is going to step in and say, listen, we can solve this problem where if you use our cryptocurrency, and this is the only one that you use, we will keep it steady, like the dollar, the euro, and everything else. Do you think they're moving in this direction?
I think that's a very good projection of their strategy, Dave, because they want to control this technology as much as possible, right? And so issuing their own cryptocurrencies is one way to do that. And but what's interesting about that is the volatility you describe. That is actually a function of any open, transparent market, right? In other words, buyers and sellers, there's a lot of emotion in play. People get greedy, they get afraid. And so volatility is a sign of a healthy, transparent market. Whereas if you're going to control it, like you're suggesting the authorities are hoping to, and keep it sort of fixed, well, what you're really doing is you're removing that financial instrument from the marketplace. In other words, it's being controlled, and if it can be controlled, then it can be manipulated. And so, again, we have the same problem that we have in the rest of the economy. There's no price discovery. Nobody knows what anything's worth anymore because it's all controlled from the top. And so this is why I think that fantasy of the authorities of being able to issue their own Bitcoin equivalent, and everyone's going to abandon these independent blockchain technologies like Bitcoin and Ethereum and Dash. They're going to abandon them in order to use JP Morgan's or Goldman Sachs or the Federal Reserve's or the Bank of China's. I think that's a fantasy, because the whole idea, the whole value of these independent currencies is that they're not controlled by central banks and central governments. And so it's sort of like a conundrum. You know, as soon as they issue a cryptocurrency, they've removed the entire value of the cryptocurrency, which is that it's independent of authority. So I would not say they're going to be able to pull that off. There's going to be I think a growing demand for currencies that are independent of central banks and states.
And if there is a demand for that, again, like what Christine Lagarde said, there's really no reason to have banks, right? Or the central bank.
Right. And that's one of the promises of the blockchain, is that all the transactions are transparent, and so that you don't need a clearinghouse. In other words, you get rid of the core function of banks, which from like the 1200s in Europe, you know, from the beginnings of the modern financial system, the bank was the clearinghouse where borrowers and lenders could trust this third party to settle their accounts and to hold their money. And so if you don't need that clearinghouse function anymore, then you go, well, what are banks good for? And you go, well, to borrow money from, right, to create credit. But there's more decentralized ways of creating credit that also don't need centralized banks. And so, yeah, I think that Lagarde is on to the future, which is we can replace the entire highly concentrated wealth and power of these banks and eliminate them and adopt a more decentralized model.
Charles, do you still think the economy is going to have a correction, or people call it a collapse, a crash? Do you still think we're headed in that direction?
You know, Dave, it's a question that plagues many of us, because those of us who've looked at skeptically at this story that the recovery is sound and the economy's solid and everything's wonderful. We see that the central authorities have managed to keep the global economy kind of chugging along and the U.S. economy kind of chugging along. And so it does raise the question, are we going to turn into like a version of Japan where the economy is stagnating beneath the surface? You know, wages are stagnating. People don't make enough money to get married and have a family, so your birth rate collapses. All these social consequences of a stagnating economy that we see in Japan, 25 years of stagnation, but, you know, they just chug along, right? And so I think my answer is, I think beneath the surface, there will be something that brings the system down. And I tend to think that thing is inflation, because inflation is what we're told constantly is dead for the rest of our lives, or maybe, you know, for 1,000 years. You know, there'll be no more inflation. Interest rates will stay at zero forever, and we'll never have any inflation. And as you pointed out earlier in the program, we actually have high inflation in certain sectors of the economy already. And so inflation is something that the authorities are not really set up to handle. And so there also could be like an external shock. We're also told that there's limitless oil. You know, the world is awash with oil. Oil is really cheap. There's no reason to suspect there'll ever be any, oil crisis or shortage. And so I think the potential for an external shock of something that the system's not really set up to handle, such as some kind of war or geopolitical crisis, that suddenly there's a shortage of oil, which is the lifeblood of the industrial economy, or a rise in inflation that causes a currency crisis somewhere in the world. There could be a lot of these issues that the system isn't really set up to handle that could cause a crisis. And then the question is, when would that happen? My guess would be we're certainly vulnerable to some sort of crisis like that going forward, like 2018, 2019. And then we can imagine the central banks doing what they always do, which is, creating more money and pushing it out there in the hopes that that'll solve all the problems. But eventually that doesn't work anymore, because the problems aren't the type that can be solved by printing another $4 trillion and pushing it into the banking sector. That worked this time around. But the crisis that I see coming up in the early 2020s, I don't think that's going to solve that. I don't, not every problem in the global economy can be solved by creating $4 trillion and then pushing it into the banking sector. That worked once. I don't think it works again.
Charles, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
Please visit me at of2minds.com.
All right. Thank you very much. I appreciate you coming back on the Spotlight.
My pleasure, Dave. Thank you so much.
Thank you.